Listen up, because what I'm about to tell you is critical and you won't hear it on the mainstream news. At 7:40 a.m. this Monday morning, something happened that could completely change the game for anyone holding silver. While most people are seeing a simple market correction, behind the scenes, a major trap has just been set and millions of retail traders are about to walk right into it. Major exchanges, including the CME, have just hiked the margin requirements for holding silver by a staggering 36%. This isn't a small adjustment, it's a massive increase in the cost to hold your position. What does this mean for you? It means a forced sell-off is imminent. Traders who can't meet this new, higher margin will have their positions liquidated, whether they want to sell or not. This is designed to shake out the small players and create a wave of selling that will cascade through the market. If you're currently holding silver or even gold, you need to be aware of this right now. Your broker could be on the verge of closing your position without your permission, all because of this sudden rule change. This isn't speculation, this is happening. The news cycles haven't caught up yet, but the dominoes are already starting to fall. This forced liquidation creates an artificial dip, a manufactured price drop that institutions can then exploit to buy up silver at a discount. So why is this happening now? It's a classic playbook move. When there's a surge of interest from retail investors, the big players change the rules of the game to their advantage. They raise the cost to play, force the little guys out, and then scoop up the assets for cheap. We're seeing the evidence right in the data. Let's look at the leaked information from the CME group. The official notice confirms this margin increase, but it's buried in technical jargon that most people will never see or understand until it's too late. This isn't just a US market phenomenon either. This has global implications. Take a look at the Shanghai market. Right now, silver in Shanghai is trading at a massive premium, sometimes up to 50% more expensive than what we see on the COMEX in the US. Why the huge difference? It shows a major supply and demand imbalance. While the Western paper markets are being manipulated to push prices down through these margin hikes, the physical market in the East is screaming for more silver. They know its true value, and they are willing to pay a premium for the real physical metal. This discrepancy is a giant red flag that the paper price you see on your screen is not reflecting the true physical reality. The narrative they will sell you is that this is a normal market fluctuation. They'll say it's about managing risk. But the timing is too perfect. It happens just as silver starts to gain serious momentum. This isn't risk management, it's market manipulation, plain and simple. They are engineering a sell-off to scare you out of your positions. They want you to panic, sell, so they can buy your assets for pennies on the dollar. So what should you do? The title of this video says, "Do not buy," and I need to be very clear about what that means. Do not buy into the panic. Do not buy into the paper market trap that they have set. This is not the time to be leveraging up on futures contracts or other paper derivatives that are subject to these margin calls. This is the moment to be cautious and understand the game that is being played. If you are a long-term holder of physical silver, this is a different story. This manufactured dip could present a buying opportunity for physical metal, but you have to be careful. The paper price might go down significantly in the short term due to this forced selling. The goal of this video is to warn you about the immediate danger in the paper markets. The institutions are counting on you not knowing this information. They want you to see the price drop and think, "Oh no, I was wrong," and sell everything. Don't fall for it. Let's break down the mechanics even further. A margin call happens when the value of an investor's margin account falls below the broker's required amount. With this 36% hike, the required amount just shot up overnight. So, thousands of traders who were perfectly fine on Friday are now suddenly facing a margin call on Monday morning. They have two choices: deposit more money into their account immediately, which many can't do, or have their positions forcibly closed by the broker. This creates a wave of sell orders hitting the market all at once, which naturally drives the price down hard and fast. This is a coordinated event. Look at the timing, 7:40 a.m., just as the trading week is getting into full swing, but before the majority of people have had their morning coffee and caught up on the real news. It's designed for maximum impact with minimum initial visibility. This isn't a random event, it's a strategic strike against retail traders. The disconnect between the Shanghai price and the US price is your most important signal right now. When a major physical market is willing to pay 50% more for an asset than the paper price suggests, it tells you the paper price is artificially suppressed. The East is buying the physical metal, while the West is playing games with paper contracts. The long-term trend is clear. The demand for real, tangible assets is growing, especially in the face of this kind of manipulation. So the key takeaway is this: be aware of the trap. If you are in leveraged paper positions, you are in the direct line of fire. Consider your risk and understand that your position could be closed without your consent. For those who believe in the long-term value of silver, this volatility is part of the battle. The big banks and institutions will not give up their control over the price easily. They will use every trick in the book, and this margin hike is one of their biggest weapons. Stay informed, don't react emotionally, and understand the difference between the manipulated paper price and the true value of the physical asset. We are witnessing a major event unfold, a forced sell-off designed to benefit the few at the expense of the many. Don't be one of the casualties. We will continue to track this situation and bring you the real data as it comes out. Make sure you are subscribed so you don't miss these critical updates. Thanks for watching.